Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education playlist on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to look at a simple journal from my book, The Trading Journal, Trading Wisdom Part 2. Let's take a look, and we're looking at KIKO, KIKO, a trend reversal with a two-level filter. So this is how I've categorized the type of play. As with every trading journal entry of the thesis, the stop loss, the profit plan, mindfulness, end result, and lesson learned. And these are all explained in different videos, what their purpose is. So for KIKO, the individual says, I like it from a fundamental standpoint. However, the market does not like it. So that's a good point here. The person likes it, but they'll recognize it's a downtrend, right? The market doesn't like it. And they've been watching it slowly go down. But there's been some volume and a minor bounce. So maybe something's happening. First, we have the trend line break, the descending supply trend break. And this individual is watching for the lower high break, which would trigger a two-level filter breakout. $8 is the trigger level. This individual says that a break of 8 would suggest that the momentum has turned around. So they don't like it, and they like it, but the market doesn't, and they've been watching to see if it turns around, and $8 would suggest that momentum has turned around. The idea here is that they're going to take a long on the first 4-hour candle close above the breakout level at $8. Stop loss says if it doesn't hold above 8, the idea will have failed. The trading thesis will have become invalidated. They recognize that a simple break from a diagonal trend line is not enough. They can ride that trend line down, so you wait for the lower high break. The idea here is that it has a pretty good chance of reaching $11, which is referenced as a price range from the year before. The plan is once the price gets closer, this person will drop to a lower time frame and look to sell a decent amount of their initial position to leave some available to pay yourself for a good idea and to leave some to ride as well. They expect that since it's a big move, the price will likely pause there at that major level. Mindfulness is important. This individual is on a journey. This is in a series of trades. They recently went on a break after some terrible trades, and now they're back, and they know that not every trade's going to be a winner. They like the fact that this is a trade idea that's well-defined, and importantly, this person has confidence in their ability to execute the plan. What happened? Well, the trade completed, and it was a successful trade. The price made it all the way back to the $11 range, as was suspected, and this person took some profit. Now, the price consolidated and then continued forward past that $11 range, and the individual was riding free, essentially. They have 1/3 of their original position, and they're just riding it free without worrying about it because they've already taken profit on the remaining 2/3 or 67% of the position. They've already paid themselves for a good idea. And in terms of lesson learned, the person says that they left some money on the table, but they're okay with that because they paid themselves for a good idea. You're never going to nail it perfectly, play it perfectly. You have a position to ride. You can enjoy the trend and ride with the trend. And since it's a smaller position, we know that it's easier to manage. It represents a smaller percentage of risk assets, easier to manage emotionally. So this is just a good framework of a sample trading journal entry from my book, The Trading Journal, Trading Wisdom Part 2. And this is part of the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Thank you, folks, and talk to you soon.